All right, y'all. Welcome back to this week's small carrier market update powered by Freight Waves Playbook. It's good to have you in here this morning. We're keeping our promises always, real data and real talk. While this week we're digging into what's actually moving and what's sitting. We're watching container volume slow down at key ports, and what's already cleared through customs this week is telling a very uneasy story, which is a little different from what we've covered in the past. We're going to talk about the pressure that's going to apply on spot rates potentially and overall tighter competition, especially if you're coming out of those port areas. As always, we'll walk through tender rejections. We'll look at volumes. We'll look at diesel fuel. We'll look at any spot rate shifts and all that import outbound volume. It's going to tell us where the freight might be showing up next and where it ain't. So we're going to use that as an opportunity to kind of dive off of. So grab your notepad, pull up your dashboard, or just listen in. It's time to get better so that way we can get smarter. And I want to go ahead and move forward with our very first slide as we always cover. Outbound tender rejects. Well, a positive, rejections are slightly higher this week than last week. Still weak overall, but it's not falling. Obviously a couple of weeks ago, I think we were at 4.542. We ticked up a little bit, still under 6%, but I think it's always a good sign to have something positive as we move into this market. I don't still see anything that's going to really indicate a true tightening. And typically, when the rejection index is lower, obviously your brokers are going to have more power in the negotiation process. So these are the things that I want you to be aware of as you go through this week and as you're booking your freight. One thing I can tell you is kind of, obviously another good sign. We had a rebound in overall volume index. If you remember, just a week ago, we were well below 9,000. Now we're above 10,000, which is a positive. I want to look at any opportunity to call out a positive so that way we can have some sort of indication of seeing the story from both sides. This shows us that it might be a little bit of freight that's starting to move again, but I don't want to get too fast ahead of ourselves because we've seen this trend before. Could be back to school, it could be pre-holiday. Obviously, that's something that we really don't have a clear answer on at the moment. But we can keep an eye on it as we go through next week and see what that does for us. Obviously, nowhere near peak season levels, so nothing to get super excited over, but just to give just a little positive as we go forward from that. Another positive, even though spot rates haven't really moved, and when I mean really moved, as you know, we've been hovering around that 233, 232 for a while now. We had a 1 cent increase in overall spots. NTI went up just slightly. Anything is better than nothing. It's something that we want to continue to watch for, especially if these volumes hold out and we continue to see improvement in volumes, which, if we're going to rely on import and export to assist us with that, I don't see much relief on that within sight, but this is worth watching. It's still holding steady. It's not falling, but at least it's at neutral, and we'll take a positive uptick where we can. Where we don't want a positive uptick is here. Fuel is rising again. Man, we're getting closer and closer to that 365-day high of 380. We hit that 380 mark in the wintertime or in not the winter time, but obviously the back half of the fall, maybe into the winter. Obviously that's an area that's uncomfortable. Being that we're 30 cents above where we were in June, but rates are not moving at the same pace. That's why you're feeling that pressure. And I know you see it when you're at the pump. I know you hear it. This is the things that's going to eat you in your profits. And I can tell you, that's a huge increase, man. When you're talking about that 30-cent increase is a huge increase. That's something that we have to keep our mind and our eyes on, especially when you're routing and your fuel routing softwares. If you're using any tools that provide you with the best opportunities for fuel selection and stations, make sure you do that, man. Make sure you're pre-planning. Obviously, you don't want to buy fuel in the Northeast if you don't have to. You don't want to buy California if you don't have to. You want to follow the exact model of ensuring that you select your stations carefully and you focus on fuel consumption. Those are the two things that you can control. And then if you're on contract, it's that opportunity for you to review that fuel surcharge math and adjust if needed. One of the things that, from a negative standpoint, I said a couple of positive. I'm going to give you a couple of negatives here. Number one, if you look at the map, this map is a lot redder than it was a couple of weeks ago. Obviously, it was redder than it was last week. A couple of weeks ago, it's extremely blue. Now you can see these pockets that are blue. What this tells you, and what I want you to do, is take a good screenshot of this, get your eyes on it is, these are the areas that have the highest rate of spot changes over the last 4 days. So these are the areas where you see spot rates are increasing. Anything that's in blue, spot rates are up. Anything that's in red, spot rates are down. So what you want to do is you want to go from blue to blue, obviously. So make sure that you get a good idea when you're booking. Make sure you get a good idea on where those areas are. Don't take the fool's gold. Don't chase that pot of gold at the end of the rainbow. Find yourself in an area where you can find consistency, and that's your best play to go at. I always say go where it's blue because that's where the money's at, and that's the way that you're going to be able to leverage that even better. Now, on the reefer side, reefer rejection rates, they declined just a little bit. They cooled off a little bit from the last couple of weeks, but nothing to be alarmed of. They're still holding almost 3 times better, well, at least 2.5 times better than dry vans are. And it's, obviously, we've seen some consistency within reefer. Some of that's attributed to the harvest season, obviously. The demand for reefer is still higher than dry vans all day long. If you're in a reefer, you're not feeling it as bad as dry vans are, but you're spending a little bit more fuel, and obviously that's something that has to be considered. But your positioning as far as rates is better, and that's something that obviously you want to use as a positive as you can go through. When I look at the index, man, look at the right side of August. We've seen nothing but climbing. They're continuously climbing slowly and steadily. Now we're just a hair under 270. We're at 269 now, whereas the highest that we've been since July. So that's definitely a positive. It went up over 6 cents week over week. That's something to be positive. And holding it right there at 269, I don't know, maybe next week we'll see 270. We'll take a look. It's not the July peak, but it is close. It is really close. So especially as we move into October, as we finish out that harvest, we'll keep an eye on that. Carrier exits, something that I like to give you an idea on. This is one of the charts that I get asked out about a lot, and I want to make sure that you have it every single week so you can dispel anything that you see. Last week, not a big change, right? So we haven't seen a big change. Being that this data is lagged, I want to give you a week to week so you can kind of watch the bouncing. So over last week, we lost 78 net authorities. So this is just something that, I'm just going to keep an eye on. Don't make too much of it, again, because this is delayed data. Until we see a continuous downward trend, that's what you want to keep an eye out on. And obviously Q3, Q4 is where you're going to see the most in regards of exits historically. Obviously that's something that historical. There's no real rhyme or reason behind why we would see anything differently this year, maybe perhaps even more.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. The people that I see most successful in this business operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the Freight Waves Playbook.
Now, going into ocean TEUs, 20-foot equivalents. So that basically means your containers, right? This is an idea on what you can expect to see from just overall freight that's hitting the market, that's going to hit the truck. They rose a little bit, just a little bit, right? Just a little bit. When I mean a little bit, I'm talking about like a percent, like real little. But it's a slight uptick, something that's positive. We're 400 points behind July, but, still right now that anything will take what we can get at this point. This is a leading indicator, like I talked about on the last multiple one of these updates. This is telling you what's happening 3 to 4 weeks down the road, right? So this is where you have to be mindful of. This is your demand from an inbound freight perspective. This is a demand that's being driven into the actual ports. That's going to need to be demand for trucks to take them from the ports. And this is a 3 to 4 week time. So what I would say is if you're banking on a big holiday freight push, this is not going to support that. And I mentioned that earlier. This is not the information that you wanted to see, especially with retailers playing it the way they want to play it. But nevertheless, I wanted to make sure that you have that information. Now, I wanted to layer on 2 more additional points just so that way you can have some information on too as well. So I'd also pulled the TEUs in transit to U.S. ports, and I wanted to list out the overall volume that's being allocated to ports and where they're going. And on your screen, you can also see now the difference in volume week over week, month over month, year over year. Now, obviously, you got your big hitters like Los Angeles. Los Angeles is your biggest, biggest volume king, but they're down 5% over the week. Then you got Houston, which is the only port on here that's up pretty much across the board, just from a standpoint of they've got, they're flat on week to week, but they're up month over month, up year over year. So the only one that's really kind of just feeling it. And I'm gonna tell you, New York, New Jersey, getting hard, man, year over year. New York, New Jersey is getting hit. That and Port of Norfolk, you guys year over year getting hammered. Had a little uptick over the week, but month over the month, man, you've been double digits down for quite some time. So the volume that's coming in there, obviously, not like it was last year, or even in those cases, not like it was a month ago. So wanted to give you an update on the overall volumes there. Baltimore saw the strongest weekly gain across all ports, but their volume is lower. So that you look at their volume, their overall volume index is like at a 41. So not marginalizing my Baltimore folks, but in comparison to the Port of Los Angeles, this gives you an idea on what to expect from that standpoint. And then I wanted to layer in a cleared container volume. This is the ones that the freight that actually hit the streets, right? You got your volume, and then you got your cleared volume. This is the cleared volume, and I want you to get an idea of cleared volume. Again, look at LA, right? So if you're out on the LA ports, the stuff that's hitting the streets, obviously you're going to have a bigger shift. This is all probably that built up. Remember, we talked a couple of weeks ago. We had that built up demand, and you got the 3 to 4 week out lead time, and now it's finally clearing custom. This is what usually happens. Long Beach collapsed though. So when you look at Long Beach dropped 24% there. So they're down 24%, down over the month, down over the year too. Big time down over the year, over 38% down over the year's overall volumes. And Houston, obviously, having the opportunity to continue to shine. They got that up 20% week over week. So 20% more freights hitting the streets down in that Houston area. And then for the year, their freight's been hitting out pretty good as well. So Houston looking good. Savannah's down month over month and year over year, but they're up week over week. So Savannah's another one of those regional ports, especially down here in the Southeast, that really showcases a lot of volume for us that's coming in those particular areas. When you got your Charleston, you got your Savannah, those two ports, and then you got Port of Miami as well. So just wanted to give you a quick update. I always like to keep this between 12 and 13 minutes because I want to make sure that I give you your time back. I appreciate you stopping by. As you can see, I wanted to layer on some additional information. Over the next couple of weeks, we're also working on the opportunity and the ability to be able to layer on even more detail in terms of that. And the detail we're talking about is stuff like the actual commodity that's coming in and things of that nature. So working on that. I hope to have an update on that pretty soon. If you haven't already, make sure you go in to your Apple store and download that Sonar Blue to Blue app. It is $9.99. It is an opportunity for you to have this information right at your handheld, right at your mobile device. It's mobile only. Make sure that you take a look at it. Give it a try. It's $9.99 a month. The more information that you have, the better off that you can be. And until next week, this is a small carrier market update. I hope you have a great week.